Sam here, and I'll be doing the Thursday review for February 26, 2026. So, yet another Thursday is in the books, and we continue to be in this really unusually tight trading range here for almost 3 months now on the SPX, just kind of clinging to that weekly 10 and just really going nowhere. So I did just finish making the video for the folks in the Mastering the Trade room, and there's not a whole lot new to talk about, right? And from an index perspective at least, there's not a whole lot new to talk about. There's only so many ways I can describe a barcode to you. But I just want to show you a couple of highlights from the video that I just made for the folks in the premium room, and kind of just go back to Thursday in terms of something that we talked about. So real quick, let's go back to last Thursday's video, which is recorded and available for you on YouTube. It's 1 week ago to the day, and we talked about a couple things when it wasn't that obvious. We talked, and this was last Thursday, we talked about a mechanical short squeeze to the upside, right? Because the market had gotten a little bit too in front of its skis in terms of getting bearish, right? So mechanically, I was looking for a short squeeze to the upside to begin next week. So this Monday, we did get that. I was looking for some Iran news to come out that would be seen as positive and as progress that would again relieve some geopolitical tensions. We got that, and we're getting that even more today. And then lastly, I was looking for Nvidia to beat, which they did. I was looking for the NASDAQ and Nvidia to gap up and then get sold off the entire day today. I was wrong about that. They did not gap up. They actually gapped down, but then they sold off all day. So that was as clear as I could possibly see it, and it's cool to see it play out. Now from here, do I have as much clarity? Not as much, no. The only thing I really have here is just a trade that I think has a really good RR, really good risk to reward. So I'll start with that. So this is a new trade that I sent out today in the room. Feel free to pass on this one. Again, I'll just bring you what I got, but feel free to pass on it. What I'm looking for here is a retest at some point, ideally in the next, ideally fast, of the week of the daily 200, which right now is at 65.54 on the SPX. Notice how that lines up here with these previous lows as well, right? So if you ever take out this little level here at 6,800, I don't really have anything of significance basically until the next zone, which I've just drawn in there, roughly 65.50, right? So what I did was I did a butterfly there, 65.50 butterfly. I did it 150 wide. So I'm at 6,700, 65.50, and then 6,400 as my wings, right? So this is what my butterfly ends up looking like. I'll make money basically anywhere kind of in this box here. Now, of course, it is a put butterfly, so if the market goes up, this will not work. But I paid $9 on a 150 wide butterfly. This is for the March monthly expiration, the PM series. And for $9 to have a potential max profit of 150 is pretty good. Now, I never go into butterflies expecting max profit, so 150, maybe let's cut that in a third, which would be 50. So betting 9 to potentially make 50. And that's kind of, not a great scenario. I'm already cutting the potential max profit in a third. That's not bad either, right? It's about 5 to 1 risk to reward. I like those odds. I like my placement. The idea makes sense. Let me caveat it again, because regardless of how I feel, it's important to say it, although it should be obvious. If the market goes up, if the market goes sideways, the trade will not work. This will require a break of this level at 6,800 at some point, and a retest down here of these lows at 65.50. So that's a new trade that I have out in the room. Just want to let you know about it. One trade that I talked about in here last week that actually will give me a good opportunity to discuss some things with you guys is RTX. So we didn't get into RTX until 2 days ago, and I want to show you why. Because I was looking at this to potentially break out to the upside. And of course, whenever you're trading stuff like this, one thing that you want to be really careful of, and this is just the word that comes to mind, use whatever word you want, but you want to be really careful with normie ways of thinking. Normie ways of thinking. What is a normie? A normie is somebody who's watching the news. Oh, Iran, they click the channel of, oil, the Jim Bobs of the world, right? The guy that sits on the lazy boy recliner watching the news. You want to be very careful with having your opinion match theirs. And Jim Bob on the recliner is probably thinking, oh, Iran war, RTX, here comes oil. And I think actually they probably will be correct. But markets aren't that easy, right? It's a little bit of a case of the Princess Bride, where markets tend to move on you know that I know that you know that I know kind of situation. So the market knows that you, or Billy Bob on his recliner, not you, but Billy Bob on his recliner, it knows that Billy Bob on his recliner is probably buying oil and defense stocks because there's a war. So what does it do? It likes to shake you out, right? How big a boy are you, Billy Bob? And Billy Bob usually isn't a very big boy. So I want to show you this pattern here because aside from Raytheon, this pattern will serve you, especially if you have the Squeeze Pro or the Squeeze Ultra. The Squeeze Ultra actually is going to be a lot better for this because it will actually tell you that it's not a good squeeze. But I'm going to point out why it's not a good squeeze. So I was looking at Raytheon up here with you guys last Thursday, somewhere up here. It doesn't matter where. It was up here somewhere. But when I was looking at it in the room, I was like, look, there's a high compression squeeze. It's got the magenta dots. These like to break counter trend. So clearly here you had an uptrend, right? You go into a high compression squeeze. These have a personality to them. Now again, it's a game of probabilities, so not everyone will behave the same way, but from a probability perspective, they do behave the same way. And that is, you have an uptrend, you go into this ultra tight consolidation with a high compression squeeze. You would think uptrend into a tight flag, you're going to break out and continue in the direction of the squeeze. Logical way of thinking, and if it was a regular squeeze, that would make sense. Because it's a high compression squeeze, I actually told the folks in the room, let's wait and buy it, right? So we waited and we bought it, we actually bought it right here. We bought it right there. I'll go back and show you exactly how I got that level, but we bought it right there in the circle. Now, of course, the next day, you had a little bit of geopolitical tension release, and that was rewarded with a $5 move lower. Not great. We don't love that. But basically, from where I bought it, it's basically right back to where it is, right? So the takeaway here, it's going to be two things here, and I'll be very clear. One, when you have a high compression squeeze, expect this. It goes, you're in an uptrend, you're in a very tight consolidation, right? It gives you the high compression squeeze. Expect for it to break lower, and then if it's any good, it'll then break up like this, right? So there's a difference between this squeeze and the regular squeeze, which would be up, chop, 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 chop. You go into a squeeze, and then you go that way, right? Notice that there's a wrinkle here in that the high compression will break short first before it actually breaks long. It makes it very messy, but if you are anticipating it, you can actually get a pretty good entry, right? So instead of paying like $4 or $5 for this contract, my last bid on it was $3. The day that it dropped, that we got filled, I actually dropped my bid to $2, and then I got filled at $2.20. So how did I get that price? Well, I used the anchored VWAP for the year, right? So this is the average price paid for the year for Raytheon, and it's kind of looking for it for support. It's the magenta line. This is built into TOS, so I would highly suggest that you use it anchored to the beginning of the year, and you will find that it will be quite helpful. So I just wanted to review that one because we talked about it last week. I got into the trade 2 days ago now, and basically it's a little under break even. It's like down like 10-15%. Is it my favorite trade? Would I get in now? I think it's very difficult, right? So let me transition from this to maybe something that might be a little bit more your speed or our speed. So a quick point, if the first trade works, which is the SPX to the daily 200, I doubt that almost anything else will work, right? So I'm going to show you good picks because I already gave you the bearish pick. So the bearish pick I usually will just always execute in the indexes. You got that one. From an ideal squeeze perspective, then something like this came up. So John has the new Squeeze Ultra, and with that comes basically a scanner. It's a radar screen / scanner, and a lot of folks in the room have been finding good picks just using the scanner, and this is one of them. So this is SLB. I'm looking to buy the 50-55 call debit spread for March monthly, and I'm bidding 175. I do not yet have a fill. I don't mind paying more, but I'm bidding 175 on the 50-55 SLB. Another one that came up today was Alcoa. So again, you'll notice that a lot of these kind of look similar. Notice that they're also not tech. So, there's that aspect of it. For those of you that like weird stuff, I won't trade this, but I have to give it its due. So something like Norwegian Cruise Lines here, another ideal squeeze, very clean chart, very nice looking chart. Personally, I'm not going to trade it. It's not liquid enough and I don't know it well enough, but I'm sure one of you does, so now you're aware of it. Another one that came up was BE. So this one's kind of interesting because it is an energy stock, not like an XLE stock, but it is an energy stock. The issue that I have with it is that it is going to be put into the momentum basket. So momentum being like, well, you know the names, right? And this usually will go in that basket. So I'm kind of debating as to what to do with this one. I might end up trading this one myself. I don't actually have a posted trade on this one quite just yet. But keep an eye on it. Ideal squeeze as well. And then lastly, let's kind of cover this big picture thing here. So if you look at IGV, this is software, right? This is the ETF for software. And so in this is going to be Adobe and Microsoft and Palantir and all those names. So there is a potential here that this could bounce a little bit more and potentially get into about 85 half. I wouldn't see it getting above 90, but I think this could bounce here. Now, am I playing this? No, not really. I think this is a very difficult way to play it. I just want to establish kind of a dichotomy here between software and hardware, specifically chips. So that's going to be the title of the video. Hopefully HR clears it, although they've never told me no. So with IGV here, you kind of have this kind of undercut island reversal thing here. So it has to hold 80 for this to have any merit, but I could very easily see this trying to hit 85 here, which is the anchored VWAP, and then in a wild crazy shot I could see it getting to 90. It's a terrible chart. I want to stress that it's a terrible chart, but I want to just draw your attention to two things, or at least one thing. You see how it has that horizontal line of support. The box breaks that level of support, and then you break now back above the line of support again. Basically, it's an island reversal, right? It's a bear trap. Pretty cool that my indicator tells you. It's a bear trap. Specifically, it's an island reversal. That was software. Let's go to hardware. Soft versus hard. Don't Google that, by the way. And as I'm loading the SMH chart, feel free to drop us a like on the video if it's helpful. Drop us a subscribe as well. That one even helps us even more. So if you're watching the video and you're not subscribed, make sure you subscribe, because every once in a while you get somebody like John that'll make it worth your while. So we just showed you an island reversal. I don't even want to get that technical. Let's just call it it's a bear trap, right? It was a horizontal level of support. Price broke it and then went back above, right? Hardware, SMH, chips, notice it has the exact opposite signal, right? Here you have a very bullish chart. Yesterday you had the break above the horizontal resistance, and then today you have the move back below. So in this case, you actually have a bear trap. So software has a bear trap, which is bullish. SMH has a bull trap, which is bearish. So if the bears are going to make any progress here, I think that they have to hit two parts of the market. They have to hit SMH and they have to hit the banks, and they have to hit them pretty soon. In the event that that does not happen and they continue to bid up the banks and they stabilize semiconductors and they get the push in semis or in software, then I think the market's going to go higher, but it's not my primary mode of thinking at the moment. I think that this is a difficult ask going into the end of the month, which usually doesn't end well for February. So that's the full song and dance. That's every pick in the book. That's as much info as I can give you. You got some trades. You've got some soft versus hard. We ran the gamut. Let's finish with this one. So for those of you that did not catch the webinar, it is on replay. You're on YouTube, so you might as well just catch the webinar replay. Tomorrow, or excuse me, Saturday is the class, so you'll have one day to check out the Squeeze Ultra webinar. And then if you decide that, hey, that looks pretty cool, it's been a long time since we've had a new squeeze, and this is the biggest update to the squeeze ever, by the way. Even the Squeeze Pro was a relatively minor update compared to this one. So if you are a fan of the Squeeze, definitely at least check out the free webinar. See what it's about. Let John chat you up a little bit as he does. And I hope to see you in the class. I'll be there on Saturday. I like to make it fun whenever I'm in the cheap seats of a class. So I'm going to be bringing my stiff drink. I hope you bring yours, and let's have some fun on Saturday. So hope to see you there. Drop us a like, drop us a comment, guys. I'll see you in the next video. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.